Today, we're diving into the story of SBA Communications, a company that owns thousands of cell towers. And they are making a massive, some might say crazy bet. They're turning away from the familiar, safe market of the United States and plunging headfirst into the high-stakes worlds of Brazil and South Africa. So how did they get here? Well, it all starts with a really simple question.
To really get their strategy, just think about this for a second. Imagine you're a landlord, and your apartment building is 100% full. Every single unit is rented out. Business is good, but how do you grow? How do you make more money?
The answer is kind of obvious, right? You can't just cram more people into a building that's already full. You have to find a new plot of land and build a whole new building somewhere else. And that simple idea right there is the absolute heart of SBA Communications' entire global strategy. That's because their original building, the US telecom market, is for all intents and purposes completely full. There's just not a lot of room left to grow anymore.
You know, for decades, the US was an absolute goldmine for tower companies. Carriers were frantically building out their networks, demand for data was exploding, it was the place to be. But today, the picture is totally different. Wireless penetration is actually over 100%. Yep, more cell subscriptions than people. The big 4G build-out is pretty much done. And all those carriers have been merging, which means fewer potential customers for tower space. The easy money, that explosive growth, it's over.
So if you can't grow at home, what do? You look abroad. And that's exactly what SBAC is doing. They're placing a massive bet on emerging markets where the hunger for data and connectivity is really just getting started. Okay, now this slide is where it gets really interesting because it shows you why these markets are so incredibly appealing. Just look at the numbers for Brazil and South Africa next to the US. Their populations are growing faster, and critically, their smartphone penetration is way lower. Now, if you're a tower company, that's not a bad thing. It's a huge thing. It translates directly into opportunity. You're looking at a massive growing customer base that's going to need more data, more coverage, and, you guessed it, more towers. Let's drill down into Brazil. We're talking about the fifth most populous country on Earth with a massive geography that is just screaming for better 4G and eventually 5G coverage. That's the opportunity. But, and this is a big but, it's not easy. Brazil brings with it some huge challenges. A notoriously volatile economy, a currency that can swing wildly, and a bureaucratic maze that can make just getting a simple construction permit a nightmare.
And then you have South Africa, which is seen as this strategic gateway to the entire African continent. And you've got fierce competition between mobile giants like Vodacom and MTN, and that competition is forcing them to pour money into new infrastructure. That's great for SBAC, but again, it's a really tough place to operate with its own unique socioeconomic issues and some major operational headaches. And we're going to talk about one of those in just a minute.
So how does SBAC actually make money from all these tall towers? Well, the business model itself is brilliantly simple, but it is incredibly powerful. At the end of the day, they're basically just global landlords for our digital age.
The real magic here is in what's called the co-location model. See, instead of every carrier having to build their own expensive tower, SBAC comes in, builds one tower, and then leases out space on it to multiple carriers at the same time. This is just a huge win-win. It's way cheaper and more efficient for the carriers, and for SBAC, it creates this beautiful high-margin recurring revenue stream.
And here's how that profitability builds out. Step 1, you've got a really high upfront cost to actually build the tower. Step 2, you sign on your first anchor tenant. That's the first carrier to lease space. Their rent basically covers your costs. Now, step 3, this is where the real money is made. Every single additional tenant you add to that tower is almost pure high-margin profit.
And this brings us right to the central tension of this entire story. The potential rewards of being a global landlord are absolutely enormous, but the risks? They are just as big. It is a very, very high-wire act.
I mean, let's talk about the upside, because it's huge. By going global, SBAC gets to diversify its revenue, so they're not so reliant on the slow-growing US market. They get to tap into much higher growth rates as millions of new users come online. They get to lock in long-term contracts, we're talking 5-10 years, with rent increases often built right in. And of course, they position themselves perfectly for the inevitable 5G rollout in these regions.
But that massive potential is mirrored by equally massive risk. You're dealing with geopolitical instability, where governments can change overnight. Currency devaluations can absolutely crush your profits because the money they make in Brazilian reals or South African rand is worth a lot less when you convert it back to US dollars. And you have to navigate these incredibly complex legal systems and logistical nightmares just to get basic things done.
And this slide right here perfectly illustrates how real and how costly those risks are. In South Africa, the power grid is so unreliable that they have these scheduled rolling blackouts called load shedding. For SBAC, this isn't just an inconvenience. It means every single tower needs its own expensive backup power system. Diesel generators, batteries, solar panels. It's a huge, constant operational cost that you just don't have in the same way in the US.
So, with stakes this high, how does a company like SBAC even begin to manage all this? How do you navigate that kind of chaos to actually capture the reward? Well, it all comes down to having a very deliberate, very smart, multi-part strategy. They tackle this chaos with a 4-part playbook. First, local expertise is absolutely non-negotiable. You hire local teams who know the country, the culture, and how to get through all that red tape. Second, you have to manage financial risk. They use financial instruments to hedge against those wild currency swings to protect their profits. Third, they're super disciplined with their money, carefully weighing whether it's cheaper to buy an existing tower or build a new one from the ground up. And finally, they lean heavily on technology, like using remote sensors to monitor the fuel levels and all those backup generators to try and keep those huge operational costs under control.
So at the end of the day, this is about so much more than just one company's strategy. In a world that is just ravenously hungry for more and more data, these global landlords aren't just putting up steel towers. They are literally building the backbone of the future digital economy for billions of people. The only question that remains is, in these unstable, unpredictable, but incredibly high potential markets, is the reward truly worth the risk?